Pricing is just as important, and the three things that I'd like to just add to Mike is, number one, when you price your product or your service, please, it's very difficult to negotiate up. It's easier to negotiate down. So if you're going to err on the price of a higher price, you've got to understand, number one, what is your minimum cost to you of providing that service? You've got to get a return on your investment. Number two, apart from knowing what your minimum cost is, you should have an idea of what the maximum cost would be for the customer, because there's that pricing, that psychological pricing barrier. The other thing you've got to be very aware of is what your competition is charging. So there are the three C's: your minimum cost, the maximum cost that your client is prepared to pay, and the price that your competitor is charging. So please be aware of those things from a pricing perspective. Stock control that'll affect your month end is too much stock on your shelf is money on your shelf. Let me say that again. Too much stock on your shelf is money on your shelf that you cannot use to pay salaries and rents and water and lights. So go back and have a look at the stock on your shelf. See if there is stock that you can get rid of at a discount, or stock that is about to expire. Whatever you have in inventory that you cannot use is money lying unused and creating this month-end artist or this month-end blues. So I like the just-in-time principle, where you buy the stock just in time, just when you need it. So I'm not going to go and buy goods in October when I only need them in June. I will try and buy them in about March, April, because at the same token, I do not want to sit without stock. So stock control is very, very important. Cash sales are vital, and you've heard now from the bankers, they've got this offering that if you start your bank account with them and you're 2 years old, you get free cash banking. That is so expensive. I found cash sales to bank cost me a lot of money. So what do? I actually use that cash, and I pay other people with it. So I'll pay my supplier with that cash. But what's very, very important from a health perspective is that there is a record of your cash sales. I understand that in certain people's books, they have 3 sets of financial statements. Okay? Not anybody in this room. You have the set for the receiver of revenue. Then you have a set for the bank. Then if you've got staff that are on profit share, then you have a third set. Not so. The fourth one is the real set.
It's for the landlords.
For the landlords, if you're on a turnover basis, yes. Okay, so a healthy business, well, let me have a look at all these things and tell me if is there a process in place. That's what I want to ask you today. We've heard all about processes. Mike was the first one in many months that I've heard explain what the process is. You often buy these books and magazines and they say you need to have a process for debtor and creditor control, and then they give you all the benefits of the process. But what's the process? Not so. I'll share with you 1 or 2 processes today. Now, another symptom is demotivators. Unhealthy. Oh, geez, I'm really demotivated. Why am I doing this job? Shouldn't I go and find a job that pays me on the 25th of the month or the 15th of the month? And the problem with demotivators is that it flows from your cash gross profit. Because if you've got a low gross profit, you're going to have a low net profit. You're going to have a low return on investment. Let me ask you this question. You've got 100 Rand in the bank. They give you, what's it now, Terry, about 5%, not so? If you're in money market? So at the end of the year, you're going to have 105 Rand if you leave your money in the bank. If I asked you to lend me that money in my business and I'm going to use it to run my business, the first thing you should ask me, of course, is what am I going to get? What is my return? And if I said, no, I'll give you the same as the bank, are you going to lend me the money? No. Why? Risk. Okay, so your return on your investment is not good from a risk perspective, if you're going to get the same as the bank, you might as well just leave it in the bank. There's no risk there. Okay? There's no real return either, but there's no risk there. So what you need to say to yourself is, I, as a business owner, am putting a lot of money into this business. I'm putting a lot of time into this business. I'm putting a lot of my own work, my labor into this business. It's really a lot of risk for me. Am I getting the necessary return? Am I getting the necessary return? How do you know whether you have a healthy net profit and return on investment? Well, the only way you're going to know is if you have a process or if you have a system where you know what's happening in your business. And the only way you're going to know that is by a budget and cash flow forecast. And on top of that, you will do a net profit forecast because it's so easy to do that calculation. Where do you find this stuff? Hundreds of books on it. The internet has got thousands of spreadsheets you can use. Find yourself a budget and forecasting tool, ladies and gentlemen. Expense control is very, very important. A healthy business will have not only budget and forecasting tools, it will also have a system to control the expenses. Now, when you and I started our business many years ago, many months ago, it was very, very difficult to part with money, not so? Before you bought something, you thought, oh, can I just wait another month or two, or can I find it somewhere else cheaper? But then we got into that comfort zone and we forgot to do all those things. Get back to expense control because that is an indication of health control in your business. Do you have a system to control your expenses? Now, let's have a look at number 3. Okay. I like to check how wealthy I'm getting on a month-to-month basis. Wouldn't you like to do that? Here's a simple way of doing it. A healthy business has a good net asset value. Now, what is net asset value, for heaven's sake? Well, it's very simple. Take your sheet of paper, divide it into 2. On the left-hand side, I would like you to write down all your assets. Those are the things that you own. It'll be your house, it'll be your car, it'll be your business. Your business is an asset. What is important is the value of that business. And if your business is not run healthily, it's not going to have a high value. Because the more healthy your business is, the more value in your business, the wealthier you are. So your net asset value is a list of all the assets that you own. But this is the trick. Don't write them down at the value at which you bought it. So if you bought a house for 300,000 Rand, I don't want you to put 300,000 Rand down on that list because it's probably worth about 400 or 500,000 as years go on. Okay? So the values that you attach to that list on the left-hand side is the fair market value. If I had to buy your house today, how much would you ask me to buy it for? That's the value. If you have to buy your car today, sell your car to me today, how much would you sell it to me for? What's it worth? Trade-in and retail value of that. If you wanted to sell your unit trusts today, what would they be worth? If you have the Kruger Rands, what would you sell them today? That's the value I want on that left-hand side. On the right-hand side, and this is on a personal basis, on the right-hand side, what I would like you to write down all your liabilities, all your debt. Truworths, Foschini's, Woolworths, Edgar's. Ladies, how many handbags can you buy? Okay. Men, we don't buy lots, but when we buy big stuff. Not so. Okay. So all your liabilities I would like you to write down on the right-hand side. And when you subtract your liabilities from the market value of your assets, you will have a net asset value. Now that is very important because that is going to help you with collateral. And if you can't get capital or working capital, it's probably a good time to look at your net asset value, personally as well as the net asset value of your business, which you do in a very similar way. And the way you improve your debt, your net asset value is clearly You increase your assets or you decrease your liabilities. So if you are on a debt reduction program, that's fantastic. If you're not, it's so easy to do. What you need to do, ladies and gentlemen, is take that same sheet of paper, just turn it around. Write down every single monthly expense you have on a personal basis and on a business basis. And then you try and reduce that by about 10%. No big deal. Just 10%. So if you're spending 300 Rand on the telephone, try and make it 270. You'll be amazed at how much free money you will have in your pocket at the end of the month. Then you take that free money, that extra money, that 1,000 Rand or that 500 Rand, and you allocate that to a debt. First of all, you start with a personal debt. Don't start with a business debt, because the interest on a business debt is usually tax deductible. So if I have to choose between paying off my business computer or paying off my Foschini's account, I'm going to pay the Foschini's account off. Okay? Debt reduction, you're reducing it on a monthly basis. It is phenomenal how quickly you can reduce your debt to a manageable proportion. While I'm on debt reduction, every single person in this room should every single year do a credit check on yourself. Because if there's a problem with a debt, it will be on your credit check. And we often don't know about credit adverse, as Terry calls it, adverse records or judgments until we do the credit check. There's a whole bunch of websites that you can use. The one that I use is a website called www.creditexpert.co.za. www.creditexpert.co.za. And what happens is I give them my ID, my full names, and any other names that I may have had in the past. I assume they're talking to the ladies. And my address, and they will give me a little credit report. And it's free. You need to do that, ladies and gentlemen, because we don't know what's on their systems up at the credit bureaus. So once you've done your debt reduction, you'll immediately increase your net asset value. Does that make sense? Of course it makes sense. We need to do that. And cash flow management is very important, because you may have a farm that's worth 10 million Rand. And you want to go to the bank and ask them for 1 million Rand to work for working capital. Bank says no. Then we get all upset. And we say, but I've got this farm, it's worth 10 million Rand. You won't even lend me 1 million Rand. Why? Because the bank is worried about repayment ability. Because you could be a beggar on a beach of gold. You've got this big asset, but there's no cash flow. And of course, they're not going to lend you the money to pay the money back. There's got to be independent income. And the way you're going to do that is by checking out your liquidity. And the way you improve your liquidity is doing that budget I told you about.